Hey traders, Chris Keene here. This is the weekend wrap. Let's take a quick look at what's going on this weekend, and then everybody can get right back to it. What we have here, we'll start off with the Euro USD. You can see this pair had been moving higher on a trend line, and the pair managed to break through that trend line on Friday and the 135 support level. Now what we have to watch heading into the new week is that see if this will continue, and what I'm going to be watching is resistance at 34, and support is now at 132.50. You can see this is the volleyball range that the pair bounced around in for over a week in January. So we're going to see what kind of price action we get here. Any move up towards the 134 level will be telling into the beginning of the week. So that's or any move down to 132.50. We'll see if we get a bounce at that level. So I'm going to be looking to play this range to start things out early next week. And in the Euro JPY, we have a very similar range trading environment where we have a support zone here that is between 123.50 and 123, and that is going to be the congestion area, or the do or die area right there. We'll just put a little highlight in there, and what we'll be looking for is a hold or break of this zone. If we get a hold of this zone, then bam, we could push right back up towards the high at 127.90, basically 128. But if we break below this, then we could continue our push higher, push lower, and the first target would be another resistance zone between 120.120 and 120.70. So that's where we're going to keep our eyes out. So there's going to be interesting trade setups right in the beginning of the week in both the Euro pairs. We're going to see, well, if we get a pull up, this 134 level would be very telling. And the Euro JPY, we're starting out right there. I mean, if you have a bias one way or the other, you could actually play it right here, right now. If you're looking for a push higher, you could play it with stops below this whatever the low on that was, 123.41, and you could look, so it'd be a 50 pip stop, but you could be looking for a move back that could get you will get you almost 300 pips there. So it's a risk reward is nice, but I mean, I don't know if your bias would be for the cross to be moving back up higher like that. The next pair we're going to take a look at is the Great Britain Pound USD. This pair broke basically through the bottom of the channel that the cross had been moving higher, but it settled right at the 50 fib at 157.83. Now this is the 50 fib. Let's go back on a daily chart. This is the 50 fib. If you look from the steep move lower all the way from 163 down to 152. Now the pair has come all the way back up and tested it again, and it broke through the 50. So basically you can say it's been playing these fib ranges for the last few days. And what we're going to watch with this cross is if we get a hold here, we could cycle back up to 159, but if we break below, then we could be back onto the bottom of the fib range, or at the 156.61 level. So right here, right now, starting the week out, we're going to be watching the 157.83 level, and it could be telling if we get a break, basically, if we get a hold and then we get a break of this high right here at 158.24, 158.42, 159 would definitely be in sight. But if we break back below, then I would be looking for a pushback down towards the bottom of the range at the 0.382 fib, or basically the 156 level if we want to get an extension on that. The Aussie USD, as you can see, this pair played out exactly how I wanted it to, and the funny thing is I didn't even make a trade in it. When it broke down lower, I said if it came back up towards the 103.40 level, it would be a great opportunity to play the pair and look for another push lower towards the 102.50. Well, that's exactly what the pair did. It moved all the way up towards the 103.40 level, and then reversed back down. That was a lot of momentum. We could definitely see another push. So what we're going to see into the new week is see if maybe it will give us another chance to, if your bias is for but this move up higher here was all based on I guess early Friday Asian trading, where Japanese numbers came in better than expected, and it made a general feel good move in Asia, as many traders thought that maybe the economies or the demand for raw materials out of Australia may not have diminished to such an extreme. But what we're going to see here, what we're going to see in the new week is if we get another push up here, it could be an opportunity to go short once again, looking for a push towards 102.50. But if we do get a push up here and break back above 103.50, then this broader range is in play. We're right back in where we started, and we'll be looking for a push up to a 101, 1.0475, and the support then again would be at 103.50. New Zealand USD, this is the most intriguing trade and the simplest of all the trades and the most obvious if you just look at the chart here. The pair is obviously in a wedge, bouncing back, forth. We have resistance at 83, followed by the 82.80 level, and supports up here at 84.70. There's really nothing to do. The pair's sitting right at mid-range, but just look for a push to either one of these extremes back to 83 or back to 84, and you could have your if it goes down to the 83, you could place your stops below the channel support. The right ascending trend line up to 84, same thing, just a little bit above. And you can just play the range back and forth in this until the range breaks. And if we get a range break, then we'll look for a broader picture at that point. The CAD was the feel-good story of the week on Friday. The pair was breaking down lower. This is the resistance zone I've been talking about. It had just been sitting there sideways, kind of lulling you to sleep, actually. And it looked like it was going to actually try to make a push lower through the bottom, but it was saved by some positive data. Well, actually not positive, some data. And the pair broke back higher from the 0.943, but it broke right to our next resistance level. It was just the 50 fib at 1.0040. So now that's what we're going to watch. We have a fib range attack here. Break of this level, then we can be back up to 101. Hold, then I wouldn't even put into doubt another test this level. So it's basically trading very technically, and we'll just watch those levels and try to jump in here and there where we can. The the yen, interestingly enough, finally had that break that we've been looking for. I guess we'll look on this is the daily. We were to go on a daily chart, but go back 3 years and some to see where I'm getting these levels from. You can see that from when the pair ascended from 120 down towards the 75.50 level. Right now, right here, it's playing with the 0.382 fib at 93.40, 93.36 to be exact. And what we're going to watch here at these levels is to see if we can get a break. If we get a break from here, then we could see a rather strong pullback all the way towards 90.20 or 91.50 would be the first level we'd look for. And this could be an opportunity to get long, or it could be the beginning of a broader correction. If this pair corrects, it could correct big time after the run it's had over the last few months. It's basically been on a straight line since breaking around 80, well, even further than that. Been moving in a straight line higher since breaking the 81 level. We could have, if we do get a pullback, a 600 pip pullback that could get us all the way back to the about the 86 level. I'm not saying I think that's going to happen, but I'm just saying a pullback could be in the cards. But I would watch the 91.50 level and the 90.20 level. If we get a break below that, then we could see a stronger pullback. And the other yen pairs that we can take a look at those. The other yen pairs that I've been watching are the Aussie JPY and New Zealand JPY, and of course the Euro JPY. The Aussie JPY, let's pull this out onto a broader chart. The Aussie JPY, interestingly enough, we all know had that. Well, all the keen traders know that we had this 0.764 95.34 level, which, just similar to the yen, was like a three-year-old resistance level, and the pair managed to break above that and move all the way up to 97.50. But right now, the pair is back down around these levels. What we're going to watch for is if we get a break of this 95.34, and then we could see a broader pushback, and 92.50 would be the first level of support. So that's what we're going to watch, looking for a break there, and then you can go short towards 92.50. The CAD JPY in a similar, looks like we already had our move in that. The CAD JPY in a similar fashion looked as though it was going to try to move up to test the 50 fib at 96.36, but it found low resistance at 94.25. Basically, we're sitting mid-range right now. We're going to watch 91.50 as the first level of resistance. The Great Britain JPY, that was the pair. The Great Britain JPY had moved up to test very significant. Let's minimize this. Moved up to test very significant resistance here at 145 earlier in the week, and hey, it broke right through it, moved down to 147.50. Now we're going to watch this 145 level as it's definitely support, and if we get a break of that, then we could see a cycle down towards 140 in the short term. Last yen pair, New Zealand, same thing. We broke that 7.7676 fib, and I mean it's 0.618 fib at 76.76. Now that's resistance. I mean support. Would like to see the price action there. I'd like to see a break of that actually lower, and then we could get quite a big move lower towards 70. So the yen pairs are interesting. So watch the USD JPY as a hint of what we have going into in the other pairs. All right, everybody. Good luck trading. Enjoy the rest of your weekend, and remember to keep your trades keen and play it safe, and keep a lookout on the Twitter feed for trades to start the week out.